Good afternoon traders, and welcome to this live Axia stream where we're going to be reviewing my execution versus one of our elite Axia traders' execution over a comment or a series of comments which occurred on the morning of 12th of March this year. Now this all revolves around the legal advice that the UK Attorney General Cox was offering with regards to the new wording which had been negotiated by Theresa May with the EU regarding the Irish backstop. Now, not going to get too much into the detail of it, other than the fact that the follow-on from his advice was going to be which of the groups within Parliament were going to vote with or against Theresa May's deal that evening in the meaningful vote, that being the second meaningful vote. So effectively the ERG and the DUP had both inferred that depending on Attorney General Cox's opinion of this, they were either going to back or not back the deal. So if the advice that he issued was positive or that assured that there would be the ability to pull out of the backstop, then this would be very positive for cable, and if not, then it was going to be very negative for cable. So we had real clear kind of binary occurrence of what the outcome was going to be. It was either going to be good or bad, and as such, you know, there was good opportunities in both cable and the bond space as a result. So just starting quickly with the general daily structure, I'm going to be looking at cable and the bunds. When we look at the elite Axia trader, he's also going to be trading the gilts, but with regards to the structure for the bonds, we're going to mainly refer to the bunds. So just want to pay attention to where we are with regards to the cable. So this big red candle here is the day in question, but just want to notice how we'd currently been working our way up, ranging, but we were pretty much, albeit at the bottom of this structure. So we had some up room to go with some clear targets being these prior highs for upside for cable, but we also had the prior day's low, prior day being, you know, a really bullish candle on the daily. So we also had the prior day's low to attack as well. So we were kind of sitting in the middle of the prior day's range before the set off, but just want to draw your attention because this was going to be so big in the event that his verdict was going to appease these members of Parliament and get Theresa May's deal through. You know, the estimation was that the upside for cable was really big, potentially, you know, 1 or 2 points, targeting the break of this kind of 133.5, 134 area. And similarly in the bunds, we've had this large up move over the prior kind of week or so after failing to the downside and breaking out of this consolidation. And we were kind of in a position where we were just flagging to the upside in this new territory, new low yearly yields for the 10-year. And although bunds aren't necessarily the kind of go-to market to be hitting on this, if we see cable move and gilts move as a result of that, be it their inverse relationship, inverse correlation, then the bunds should track what the gilts are doing as well. So that's just the broad kind of structure that we're looking at. On the dailies, and now just moving to what we were seeing from the profile structure throughout the day. So we can see in the cable, we've been building some structure above the prior day's high before this news came out, but just highlighting how far away we were still. Say we were trading around the 132.00s area, we still had the prior day's low which come in at around 129.65, so really good upside and downside potential, with the upside target being 133 84. So these are obviously huge targets, but really given the significance of the information, this Brexit thing's been going on for so long now, but really like when we do finally get that final culmination, just wanted to make sure that you were being aggressive enough with your kind of assessment of how far this could go if the markets do kind of respond and react accordingly. And just looking again at the bunds, we'd been balancing below the prior day's low. We had quite a tight consolidation area with an inside day on the prior day. So really the thinking was if we could start breaking down, there's no reason that we shouldn't start testing maybe the 66s area in the event of some positive news or negative news. If we could break through this volume block, which ranged from 32s to I think that's 59s, then really the 74s, the high of this contract, this being the June contract, was there for the taking. So that's the broad structure, but really we're going to be looking very much at the ladders in this, and it's going to be very much driven off, you know, where the support and resistance comes in, where the liquidity is, especially in cable, which can really empty out and get very, very volatile in this sort of situation. So now, just touching on the actual headlines. Now the way this was released is what added some complexity to this trade. Now when we look at my execution, I actually missed the first headline that we received or that we heard over the squawk, and really that was quite fortunate because, you know, when we look at what the elite trader did, he was able to execute on the first headline, and then when the contrasting or conflicting subsequent headlines come out, he was able to kind of first balance his position and then cut and reverse to trade the other way quite aggressively. So, you know, sometimes the fortune's with you that I didn't get caught the wrong way around because I didn't execute on the initial move, and it kind of freed me up to be quite aggressive when the subsequent headlines came out. So this is the broad, the actual wording of the conclusion from Geoffrey Cox, but really want to focus on how this was released. So we're looking here at the three kind of sections to this headline. This showing what Stephen Swinford was tweeting, but there was multiple sources kind of releasing this information, so it just depended on which one you were focusing on at the time. So the first bit of information we got said that Geoffrey Cox says that Theresa May's new deal will reduce the risk that Britain could be indefinitely trapped in the custom union. So this was really positive. This showed that, you know, potentially DUP and ERG were going to be able to get behind May's deal and was going to be very, very positive for the cable, and as such negative or bearish for the bonds. But what we'll see after the first sort of minute or so after this came out was various kind of sources starting to gain a bit of traction on the subsequent summary of his conclusion, which highlighted, he says there is no intentionally lawful means of exiting the backstop if the EU is not acting in bad faith. In other words, if talks break down because of intractable differences rather than a failure to show best endeavours. Effectively, that's kind of countering what was said first and showing that nothing's really changed because, well, not nothing's really changed. The wording might become more favourable, but unlikely that it's going to appeal those that were using the wording of this this as a kind of sticking point as to whether that was going to support the deal or not. So really, it's the difference between these two that offer the kind of the big flip in the way the markets were moving, and we're going to look through that in a second. And we're going to be having a look here. This is, I'm going to come back to these in a second, but these are this is the 5-minute chart of the day for the bunds and cable, and just want to kind of demonstrate cable had very much been kind of broadly ranging, relatively tight range throughout the start of the day. And whereas the bonds, after selling off, had already kind of broken higher when we get to this candle, which is the candle which we're going to see the news come out. So when the negative news come out, just want to draw your attention to the position in the market. We'd already retraced a lot of the down move, so it will kind of make sense when we look at the price action as to why there wasn't necessarily such a huge reaction initially in the bonds, and really going to talk about, you know, how you can manage your execution as a result of that. I'm going to come back to these two lower charts later on. These are volume charts just to show the rotations that occurred within the first kind of couple of 1 minute candles on these after these comments. So really want to crack on and get first to looking at how I executed. Which was broadly in line with what I intended to do with regards to where I got in, but really just want to take a look at this. It only occurs over about 3 or 4 minutes of actual trading, so we're going to be able to look at this all the way through and then do the same for our elite trader. Okay, so just want to draw your attention to where these markets are trading at this time. Had we sold off already at this point? Okay, so starting prices 26, 27s in the bunds and around 57s in the cable. So what you'll see is as the markets start to react off the first comment, be it a positive comment, we're going to see cable pushing higher and the bonds start to sell off. And equally, we just want to pay attention to how the price action changes as the market doesn't necessarily seem to be reacting as you would expect, which kind of gives you an indication that potentially there's going to be some more information to come, which doesn't necessarily satisfy the same kind of directional bias. So comments out, cable off the page up, bunds traded down from 26 to 22s. Can't actually see the cable where it's trading, but it's around 90s or so. The right hand side, you can see the 1 minute candle. So it's blipped up about 50 ticks, and now is coming back. And if we have a look at this far right candle, you can see after starting at around 56, 57s, went all the way up through the double O's, so about 50 ticks, and now is trading all the way back down. So it's just worth paying attention to the price action and what's happening on the offer here, because again, this will make more sense as we look at how our elite trader executed. So be it that I missed that first part of the trade, as it comes back, I'm now looking, as I see this huge selling wick on my 1 minute of my cable chart, thinking, right, I know that I want to get full size one way or another given the result of this legal advice. So really looking to execute my full size in the cable and bunds, be it selling bunds and selling cable and buying bunds, if we get kind of a reversal of an alternate opinion or headline which comes through, i.e. a negative opinion. So as this comes all the way back, what we'll actually see is as the cable blips down, because I didn't think I could get as good a price as I wanted, I hit the bunds first and then went to the cable. Full size in both. So at this point you can just see the offer just starting to hold and just starting to push down. People starting to get a bit confused as to why this isn't going. starting to realise, think something's up, and then you'll see as the cable flicks down is when the second headline finally comes through, or everyone becomes more aware of that. So there we go, it's come through. I'm in full size in the bunds, and then hit again full size in the cable. So I think my entry point was around, I've got a feeling, I think it was around double O's in the cable. And obviously I've got in 30s in the bunds. Now, just want to draw your attention because this kind of, sorry. Is it double O's? Well, anyway, it's above the high here, so I'm 10 lots short, and I think it's probably maybe about 10s then, between 10s and 20s. But just want to draw your attention to the fact that I didn't hit in the cable immediately. It had already flicked, I think probably from 58s, probably about half a point, 50 ticks down before I got in. So I was very aware that if this started to come back towards my entry point, I couldn't really be in a position, I didn't have the risk to be able to see this starting to go offside because it's so volatile, it could happen quite quickly. So I'm actually going to scale out of my cable position very quickly, or at least half of it. I think I hit out at market in this sort of area, and then start to reassess, start to lay some bids in the cable to try and get flicked out, and then also start to try to work myself out of my bund position. So you can see I've hit out of 5 lots already in cable, starting to lay my offers to try to get rotated out in the bunds, and just laying some bids to try to get flicked out if we have another test towards the low of the initial spike. But in all honesty, given the volatility that I'm seeing, those long distance targets that I had in play, which were like, you know, 1.5 points away in the cable, are not necessarily at the forefront of my mind at the moment. I'm kind of just trying to manage the position, be it the first time that I've had full size in 2 markets on at the same time. So a little bit erratic, not necessarily quite as structured as I'd like to be in my scaling, but you know, I did take money out of the market in the cable and the bunds. But now I'm at my cable position, just want to draw your attention to how the bunds are reacting. So given what I said earlier on, where looking at what we'd done so far in the day, we'd moved all the way down and then come all the way back. There wasn't really as much kind of, you know, short positioning trapped that would need to get out of this trade, but that would need them to get out of this trade and give the swift move up that I really wanted. I knew I had some targets. I think there's a ledge at 59s, but really at this point, we hadn't really reacted in the bond space as I'd expected. It's been now sort of 2 minutes since I entered the position, and it's only really traded up maybe 5 ticks or so. But this is where my execution kind of failed a little bit, because I scaled out very aggressively. I think I covered half of my position for only sort of 1 or 2 ticks profit, because I was just quite aware that if this started coming back through my opening price, it could splash down. But in all reality, you know, that wasn't necessarily the most objective thinking, because given how far the cable has moved down, you know, and the bunds are now rotating above my average entry, you know, you should start to feel like you're relatively comfortable, that you should at least wait for the break of a high, and maybe just should start resorting to the kind of usual execution strategy which we've employed before, where just start laying 1 lots, you know, all the way up the page and just look to be hit out. But instead, a little bit kind of panicky with how quickly I got out of the trade. I'm really just nitpicking here. It was quite a good trade for me, so it's just where I could have really stretched probably at least double what I made in the bunds. Be it I managed my cable trade quite well given the volatility and the fact that I didn't really hit such a good price. But again, just these little things to draw upon. You know, if you can really start to stretch your best trades and how much you make on them, you know, it can start to make your overall numbers just kind of, you know, your progression, or how much size you can handle start to grow, a lot more effectively. It's a lot more efficient use of your risk as opposed to, just trying to put on as much size as you can. Just trying to really make the most out of the size that you have. So we can see here, I think I ended up taking only 4 ticks or so based on my full size out of the bunds, but really there was a good kind of potential 10 ticks up for grabs if I was just kind of a little bit more considered and a little bit more objective, thinking, right, I'm out of my cable position and just kind of laying one lot, so allowing myself to rotate out of this bund position. But I didn't choose to get involved again in the cable as we started to kind of move and trade down, given the way that I executed on the ECB, which was only a few days ago, where I executed very well in the first couple of minutes of the trade and then gave a lot back, getting over involved in the bunds after missing the kind of best part of the move. I was just very conscious of over trading the fallout after this initial move, and also that there may be subsequent comments that come through that could kind of flip everything back the other way. So in a nutshell, very quick trade, a lot going on, but executed well in the cable, albeit really after speaking to our elite trader, you probably want to be hitting first in the cable, be it such a thin market. But that being said, if you're not able to hit before that first blip, it's not necessarily the wrong decision to be going first to the bonds, which react a little bit slower. So now just moving on to how our elite trader executed. Now what we're going to see here is, if I draw your attention to, he was executing in 3 markets. So we have the gilts, cable, and the bunds. And really what's kind of, this is obviously a complete different scale to what I was executing, but similar markets, and it's just really good to kind of compare and contrast how a very experienced trader would execute in this. So just want to draw your attention to starting P&L. He's already up 100k on the day. It's 11 o'clock, but the relevance of that is how he manages the first move, which is then reversed. And I just want to draw your attention to the fact that, although he executes very aggressively, as he sees it's not working, he manages himself out of the trade and then leaves himself open to really attack the next move quite aggressively. And that's quite important because he's effectively flat on that first part of the move. And really this is the key to how you could really capitalize on this trade. Myself being quite fortunate that I didn't get involved in the first move, but for this trader, the fact that he was able to really manage his risk when things didn't really make sense and didn't really get going meant that he could really double down and get mega aggressive when we'd already ruled out the kind of good outcome. We're only left with the alternative, be it the bad outcome on the table. So going to play this forward, and I'll pause it once the first part of the move has gone. So you see he's in very quickly with 60 lots into the cable, 130 lots. He's actually left offered in the gilts at 79s. He was only filled on sort of 16 of those. It's quite unfortunate. But as we can see, cable's starting to come back and gilt's not really going. He's already out of his cable position, and he's just now managing himself out of this gilt position. He's started to sense that something's not quite right. He's pretty much flat on the move, so he hasn't given anything back. So let's not start doubling down in something with the being hopeful on what should happen, especially when the markets are this volatile this morning. This was a standout morning, certainly within the kind of 2.5 years or so that I've been trading. It's up there in the sort of top 10 mornings of the kind of volatility we're seeing. So there's going to be opportunities. It's just about being patient and waiting for that really clear-cut one that you can get quite aggressive on. So we see he's managing himself from 130 or so lots in the gilts down to pretty much nothing. And now we're going to see the negative kind of second headline come out, and watch how he executes on that, which really is, it's massively aggressive, very big size, top end of the size that this trader trades at. So he's flat on his position, flat on his P&L for the move, and now just resetting and waiting to see, how the market's going to react. In 60 lots gilts, 120 lots or so cable, up to 180 lots in the gilts, 120 lots in cable still, 240 lots also in the bunds, up to 480 lots now in the bunds. So really maxing out his size and managing 3 markets at the same time. First the cable, be it the most volatile, and now the gilts, but also noticing how thin the gilts are. They're kind of moving up and down, maybe 10 ticks. And we can see now he's got a similar average price to what I had in the bunds, but really just executes it in a different way, understanding that given how far the cable's going and how much it's reacting, and also how far the gilts have gone, it's just a matter of time before the bunds pop these highs. So as long as he's not going offside, looking to kind of, stay in that position and just kind of manage himself out of his size accordingly. Scaled out from 130 lots to about 50 lots in cable, and about half his size in gilts as well. Already up sort of 70k or so on the move, be it in the first splash. I think at his peak P&L he was up about 130k on the move, but really now this is where his skill comes in that kind of second phase. He's adding more into the gilts as he's thinking that they potentially have more further to go, but has only scaled himself out of potentially between a third and a half of his bund position. And really this is just a bit of a masterclass of how you can kind of manage your risk and stay in the trade and work yourself out of work yourself out of your size quite passively in all of these markets. And really just kind of eking everything out of the trade that he can, given the risk that he's deployed. So you can see after that kind of capitulation sort of period where, we're kind of, just chopping a little bit after the initial flash, now we're starting to see, specifically in the bonds, the kind of second phase of the move come in as cable then takes the low of the initial spike out again. And this is what I didn't really wait for. I was already out of my cables, fair enough, but I had good average entry and good size in the bunds that really should have been staying with this until, that payoff came and we were trading up through the high of the day, which I think was about 36s in the bunds. And also knowing that we had some targets, through that kind of volume block area, which I pointed out on the profile in the bunds as well. If we were to start trading through there's a good chance that this could keep going. So now he's just paying attention to what cable's doing. He's added some more into the highs of the bunds, which after talking to him, he said that wasn't necessarily like the best thing. This was actually the high of the move before we came back and then started grinding higher later on. But that's how this trader works. As long as he's seeing the volatility there, as long as he's seeing, that high volatility auction, high velocity in all of these markets, he wants to stay and make sure he's got something in because he knows that these have the potential to go even further. Also, given the significance of what this means, it means Theresa May's vote is going to be rejected effectively. Theresa May's deal is going to be rejected, and these are the opportunities that you really want to take advantage of. But I also just want to draw your attention to just something that I've noticed for this trader, which I've spoke about a little bit before, but where he has the high of a day, he'll often stack his offers to scale out of, say, a long position with larger offers through the high. And it's just a little thing to pay attention to, but what you often get is you make a new high, there's kind of a 3 or 4 tick splash before it comes back inside. So what you often see is him scaling out with ones in this sort of area, and then up to 10s, 20, understanding that if we trade up, splash through the high, and then draw back into kind of the previous range by a few ticks, he's able to get back in. It's just a small thing which I've been kind of paying attention to, but it's quite often, when these big moves do happen, that you are trading towards the extremes. So it's just a little kind of execution tweak, and just something that he does kind of probably without thinking, that we may be able to draw into our execution style. But really now we're just going to see him just kind of being quite calm and not too erratic in comparison to my execution, and just kind of realising, look, the chances are whenever we make a new high, or new low, there's always going to be a sense that we want to test that extreme again to see if there's any more demand to kind of extend the range. And that's where, it's a good opportunity to kind of scale out some of your remaining position. There's no need to be kind of puking or scratching where your average price is if you're not going offside. So take advantage of that. Sometimes, especially in the bond space, 1 or 2 ticks leeway where you're not going on offside, it should be enough to keep you in the trade, and it can really make or break a trade given your initial entry. So he's actually adding more back into the bunds again just to try to stay with it, but actually just starts to kind of work himself out of this position in all of these markets. I think that's pretty much the far extremes of the move. For the next sort of 5-10 minutes or so, certainly won't be getting in anywhere as much size as what he had in before. So I'm actually going to stop it there because it's pretty much the meat of the move done. But just want to draw your attention, although he flicked up to say 230k up in that first kind of high volatility splash in all of these markets, he was back to around 150k up, so he's still kind of eked out an extra 60k in the period of time where I'd pretty much covered my position and had very, very negligible size left on. So what I'm taking from that with regards to how I can address my execution is just that sometimes just by staying in the trade, that's what we're aiming to do. We're aiming to keep our size in the trade for as long as possible until we get paid. And in the bunds, for example, where we got paid was really that flick from say 36s up to 43s. It came in the space of about 5 or 10 seconds, and it didn't occur until potentially 3-4 minutes after the initial start of the move. So when it is chopping, expect that there's going to be a little bit of splash, a little bit of a reaction, and that's when you should use that as a kind of your initiative to start scaling more aggressively out of the trade, as opposed to kind of preempting that or being worried that it's going to move against you when really there's been quite a fundamental shift and a reason to kind of stay with this trade. So really just going back, just some key takeaways. Here, touched on a lot of these already, so I'm not going to go into it too much, but again, if you're onside and you're not feeling too much heat, as long as the correlated markets are showing that kind of directional, initiative that you're looking for, try to stay with the trade. Be aware of the conflicting headlines. You know, they often come up. I've spoke about this many times before, but really, if the information's been fed through to you in dribs and drabs, try to be aware of what the market's going to react most to. And if the market isn't reacting as you would expect, you know, it may be a chance of either a denial or a conflicting bit of information starting to come out. And that really is what made that our elite trader really kind of reap the rewards of this trade. He didn't fight what the market was telling him. You know, it came all the way back to the entry, and he didn't see that as a kind of reaction that he would expect to see, and all of a sudden red flags showing, and it's chance to reset and kind of like be ready for, you know, either the confirmation or the alternative or denial or whatever. And other than that, you know, first kind of experience getting my full size on in multiple markets. You know, if you're feeling a little bit flummoxed by the kind of volatility that you're seeing, you know, focus on the most volatile market that you feel most exposed in. But otherwise, just for myself, just trying to default back to that execution style and strategy that we spoke about so many times before. Just lay the bid and offer with small clips, and you never know when there'll just be one kind of big rotation which may work you out of, say, half of your position, and all of a sudden you're in a much stronger position to kind of manage the trade. So really just take advantage of your good entry when you do have it. And then other than that, I spoke about this when I reviewed some of my goals in previous streams. It's just a simple checklist to kind of establish how aggressively I want to be scaling out of these markets. Now, obviously a lot harder to do in two markets at the same time, but it is possible in that we see our elite trader doing it in 3 markets with 10 times the size, or even more, 20 times the size at the same time. So, you know, have I got a good price? You know, based on where I got in, how exposed am I to a pullback to, say, the scene of the crime or the opening price? You know, is the comment on news a game changer? Do we expect these markets to potentially trend as a result of the new information that we've had in this situation? Yes, that was really, really big. You know, what was the market positioning? With regards to the cable, there were a lot of people who were already caught long as that came back to the opening price before it splashed down. So know that there's a long way to potentially go. And in the case of the bunds, you know, the fact that we'd been trading up throughout the previous 2 hours probably wasn't as much short positioning to get caught. And as such, we didn't see the splash through the highs that we would otherwise have hoped to see. Is there an opportunity for a denial? Off the first comment, yes, there was, but once there's been, you know, the secondary bit of information which, you know, essentially eradicates what the first bit says, you know, you'd be very unlucky to then get a subsequent bit of information which turned everything back positive again. So really gave you high conviction. And then, do I have clear targets? We didn't actually end up hitting the extremes which I set about, both on the profile and the daily charts. That being said, we knew this was big. We knew there was some kind of key areas that the market would at least try to attack, and it did offer, you know, some really extended moves. So, going to leave you with that. Hopefully, have some more of these going forward. But again, just interesting to see the kind of where you can really improve your game, just to try to steer it towards what the guys who are really making the big numbers are doing, and just try to take any little bit of kind of, you know, assistance that you can. And for me, you know, take advantage of the free lesson, the fact that I didn't get killed on that first move. You know, really want to try to make sure that when you get a free lesson like that, you usually have to pay for it. You know, you usually have to lose some money to learn how to kind of cut and reverse or cut your position quite early in that situation. So take advantage of those times and really bring it into any subsequent trades where similar things occur. So I'm going to leave you with that, and I'll be with you next week, potentially for another execution stream. Cheers.